The difference between a trader who is profitable and one who is not is almost never the strategy. I have watched traders with identical systems produce completely different results. One grows their account steadily, the other bleeds it slowly. Same pairs, same setup, same market conditions. The only difference was what each trader did before the session started, during the session, and after it ended. Today I am going to give you the exact daily routine that separates consistently profitable traders from consistently frustrated ones. Every component, every habit, in the exact order it matters. In the next 18 minutes, I am going to walk you through 3 parts of a daily trading routine that most traders completely ignore. The morning preparation that sets your mental state before you touch a single chart. The session structure that keeps your execution clean while the market is moving. And the end-of-day review that turns every single session into a learning opportunity, whether you won or lost. Each part comes with a real trader story, the psychology behind why it works, and the exact steps to build it into your own trading day. By the end of this video, you will have a complete daily operating system. Let's get into it. Let me tell you about Chris. Chris is 31 and has been trading live for about 20 months. He has a solid system. His analysis is genuinely good. His entries, when he takes them in the right state of mind, are clean and well-reasoned. On paper, he should be consistently profitable. In reality, his results are unpredictable. Great weeks followed by average ones. Strong sessions followed by sloppy ones. He cannot find the variable that explains the inconsistency. Here is what Chris's typical morning looked like before he changed anything. He woke up, grabbed his phone, and spent 25 minutes scrolling through news, social media, and trading forums before he even got out of bed. He saw someone posting a big winning trade from the overnight session. He read a headline about economic uncertainty. He skimmed through 3 different traders' takes on where a specific pair was heading. By the time he sat down at his platform to trade, his mind was already full. Other people's opinions, market noise, comparison triggers, financial anxiety from the headline. A vague sense that maybe he was missing something everyone else already knew. And then he opened a chart and tried to make objective, disciplined decisions. The problem was not his system. The problem was the mental environment he brought to the system. He was trying to execute a process that required calm, clear, focused thinking. From a mental state that was scattered, reactive, and already emotionally loaded before a single trade had been considered. When Chris tracked his results specifically, one pattern was undeniable. His worst trading days almost always followed a morning where he had consumed heavy amounts of market content and social media before sitting down to trade. His best days almost always followed mornings where, for whatever reason, he had been busy with something else and come to the charts fresh, without the accumulated noise of an hour of scrolling. He was not the exception. This pattern appears consistently across traders at every experience level. The quality of your morning inputs has a direct, measurable impact on the quality of your in-session decisions. Not because the content you read is necessarily wrong, but because your brain has a finite amount of cognitive and emotional bandwidth available for clear decision-making in any given session. Every opinion you absorb before the session uses some of that bandwidth. Every comparison trigger reduces your confidence slightly. Every alarming headline activates a background anxiety that colors how you read every chart you look at afterward. What does your morning look like before you trade? Be honest. How much noise are you consuming between waking up and sitting down at the platform? And have you ever tracked whether the heaviest noise mornings correlate with your most reactive, least disciplined sessions? Why it happens psychologically. The habit of consuming market content and social media first thing in the morning feels productive. It feels like research. It feels like you are staying informed and prepared. These feelings are not entirely inaccurate. Staying informed has genuine value. But the timing and the volume of that information consumption creates a specific problem. In the first 30 to 45 minutes after waking, your brain is transitioning from sleep to full wakefulness. During this window, your critical thinking and analytical functions are not yet fully online, but your emotional processing centers are active. Content consumed during this window is processed more emotionally and less analytically than the same content consumed later in the day. Alarming headlines feel more alarming. Other traders' wins feel more threatening to your own confidence. Conflicting opinions create more confusion than they would at full cognitive capacity. There is also something called cognitive contamination. When you fill your mind with other people's market opinions before forming your own, your subsequent analysis is unconsciously influenced by what you have already absorbed. You think you are conducting independent analysis, but the opinions you read this morning are sitting in your working memory and subtly biasing every judgment you make. You are not seeing the chart objectively. You are seeing it through a lens partially constructed by whatever you scrolled through before sitting down, the exact fix, the morning preparation protocol. 4 components, 15 minutes total. And the first rule is non-negotiable. No market content, no trading forums, no financial news, and no social media for the first 30 minutes after waking. None. This window is protected. 1 is physical activation. 5 minutes. Get up, move, walk around your home. Do 10 slow, deep breaths while standing. The goal is simple. Transition your nervous system from sleep state to an alert but calm waking state before you engage with anything that requires judgment. 2 is the clean slate statement. 2 minutes. Sit quietly and write one sentence in your trading journal. Finish this sentence honestly. Going into today's session, I am carrying. Whatever comes after that, write it. Stress about something unrelated to trading. Excitement about yesterday's winning trade. Anxiety about a bill coming up. Frustration from a difficult conversation. Whatever is actually in your mental background, name it. This practice does not eliminate those emotional states, but naming them prevents them from operating invisibly as hidden biases in your trading decisions. What is named is managed. What is unnamed manages you. 3 is the plan review. 5 minutes. Before opening any live chart, review your written trading plan, your entry criteria, your risk rule, your session intention for today. This activates the part of your brain responsible for rule following and deliberate decision making. Before the market creates time pressure that makes rule following harder. 4 is the session commitment. 1 minute. Write one specific behavioral commitment for today's session. Not a profit goal, a process goal. Today, I will not enter any trade before I have checked all 5 criteria. Or today, I will place my stop loss before clicking the entry button every single time. 1 behavior. Written down. Committed to before the market opens. Skris built this protocol and ran it for 45 consecutive trading days without exception. His results in that period were the most consistent 45-day stretch of his entire trading career. Not dramatically different from the outside. The sessions looked similar. But the internal experience was completely different. He was calmer. His entries were more deliberate. His reactive, noise-driven trades, the ones he always regretted on review, almost disappeared. He had simply changed the mental environment he brought to the platform. And that change, repeated daily, compounded into something genuinely transformative. Protect the 30 minutes before your trading session from all market noise and social media. Build the 4-component morning protocol. Physical activation, clean slate statement, plan review, session commitment. 15 minutes, every single day. The quality of your mental inputs determines the quality of your trading outputs. Meet Sophia. Sophia is 27 and has been trading for about 14 months. She has a specific problem she describes as session drift. She starts each session well. First trade usually clean. Criteria checked, stop placed correctly, position sized properly, She is calm, she is following her rules, and then, somewhere in the middle of the session, something shifts. Maybe the first trade lost and she feels the pull to recover. Maybe the first trade won and she feels overconfident. Maybe the session has been quiet for an hour and boredom has set in. Whatever the trigger, by the second half of most sessions, she is trading like a noticeably different person than she was at the start. Sophia's first trade of each session had a win rate of 63% across a full month. Her second and subsequent trades in the same session had a win rate of 38%. That is not a small gap. That is a 25 percentage point drop in quality between her first and subsequent decisions in any given session. The same system, the same market, but a completely different quality of execution as the session progressed. The cause was session drift. Without a structure that maintained her decision-making quality throughout the session, she was allowing the accumulating emotional weight of each session, each win, each loss, each moment of boredom or anxiety, to erode the calm, deliberate state she had started with. By trade 3 or 4, she was making decisions from an emotional place that had little resemblance to the clear-headed place where her first trade had been taken. Here is the in-session structure that prevents this. It is simple enough to explain in a few sentences. It is difficult enough to execute consistently that most traders never maintain it. And it is important enough that Sophia's results changed dramatically the month she finally committed to it. After every single trade closes, win or lose, you perform a 2-minute reset before making any subsequent decision. You stand up from the platform. You walk away from the screen. You spend 60 seconds breathing slowly and asking yourself the clean slate question. What am I feeling right now, and is that feeling relevant to my next trade decision? If the trade won, you are checking for overconfidence. If it lost, you are checking for the recovery urge. If the session has been quiet, you are checking for boredom-driven entry impulses. You name the emotional state. Then you return to the platform with a decision. Does the market currently offer a valid setup by my written criteria, yes or no? If yes, you enter with fresh eyes. If no, you wait. That is the entire structure. A 2-minute intertrade reset. It sounds almost insultingly simple. But the gap between a trader who does this and one who does not shows up clearly in the data. The trader who does this maintains consistent decision quality throughout the session. The one who does not drifts progressively toward emotional decision-making as the session accumulates weight. Why it happens psychologically? Session drift happens because emotional states are cumulative within a continuous experience. Each event in your session adds to an ongoing emotional account. A loss deposits anxiety. A win deposits excitement or greed. A quiet hour deposits boredom or restlessness. Without deliberate interruption, this account grows throughout the session and increasingly dominates your decision-making. This is compounded by a phenomenon called decision fatigue. Every decision you make consumes a small amount of cognitive energy. Early in a session, your cognitive resources are full. Later decisions are made with depleted resources, which means they rely more heavily on emotional shortcuts and less on careful analysis. The traders who make their worst decisions at the end of long sessions are not becoming less skilled as the session progresses. They are becoming more cognitively depleted, and depleted cognitive resources produce depleted decision quality. The intertrade reset interrupts both of these processes. The physical act of standing and walking creates a brief but genuine state change that prevents emotional accumulation from becoming automatic. The clean slate question activates analytical thinking before the next decision rather than allowing emotional momentum to carry directly into it. The exact fix, the 2-minute intertrade reset, applied after every single closed trade without exception. Here is the exact protocol. Trade closes. You stand up immediately. You walk away from the screen, even if it is just to the other side of the room. You spend 60 seconds breathing slowly and asking, What am I feeling right now? You write the honest answer in one sentence in your journal. Then you ask, is the market currently offering a valid setup by my written criteria? You answer yes or no based only on that criteria check, not on how the last trade went, not on how long you have been waiting, not on what someone posted online. If yes, enter. If no, wait. There is one additional rule within the session structure that Sophia found critical. After two consecutive losses in a session, the reset becomes a 10-minute reset, not 2 minutes. Two losses within a single session indicates a specific emotional state that requires more recovery time before another decision can be made from a genuinely clear place. This is the in-session version of the daily loss limit. Not a complete session shutdown, just an extended pause that gives your nervous system enough time to return to baseline before the next entry. Sophia's win rate on second and subsequent trades went from 38% to 57% in the first month she applied this structure, almost identical to her first trade win rate of 63%. Session drift was not completely eliminated, but the gap between her early session and late session execution quality shrank from 25 percentage points to 6. That change, compounded across 22 trading days in a month, produced her first genuinely profitable month in over a year. After every closed trade, perform a 2-minute intertrade reset. Stand up, walk away, name your emotional state, then evaluate the market fresh. After two losses in a session, extend to 10 minutes. This prevents session drift and maintains consistent decision quality throughout the entire session. Let me tell you about Marcus. Marcus is 35 and has been trading for 3 years. He is experienced. He has been through the early mistakes. He understands risk management. He is not a beginner by any measure, but his growth has plateaued. He has been at roughly the same performance level for about a year. He is not losing money, but he is not improving either. He cannot find the lever that moves him from consistent butt flat to consistently growing. When I asked Marcus about his end-of-day review process, he described something most traders would recognize. After his session ends, he closes the platform, checks his P&L for the day, feels good if it is green and slightly frustrated if it is red, and then moves on with his day. Occasionally, if something particularly interesting happened in the session, he might think about it for a few minutes. But there is no structured process, no written review, no deliberate extraction of what the session taught him. Marcus was not learning from his sessions. He was experiencing them and then discarding them. Every session contained data about his own patterns, his emotional triggers, his execution quality, his specific strengths and weaknesses. And every single day, that data was being thrown away because he had no process for capturing and using it. 3 years of trading experience that could have been 3 years of compounding self-knowledge had instead been 3 years of similar sessions, producing similar results with no clear trajectory of improvement. Here is what distinguishes traders who genuinely get better over time from those who simply accumulate more trading hours without meaningful development. It is not talent. It is not even the quality of their analysis. It is whether they have a structured process for converting each session's experience into actionable self-knowledge. The end-of-day review is that process. And traders who do it consistently improve in a way that traders who skip it simply do not. The review takes 10 minutes. It happens after every session, every trading day, without exception. Not on Sundays when you have more time. Not only after bad sessions when something obviously went wrong. Every session. Because every session, even the unremarkable ones, contains information that compounds into a detailed, accurate understanding of your own trading patterns over time. What does your end-of-day process currently look like? If the honest answer is, I check my P&L and close the platform, you are leaving an enormous amount of developmental value on the table every single day. Why it happens psychologically? The reason most traders skip structured end-of-day reviews comes from two sources. The first is outcome focus. When the session was profitable, there is no felt need to review. Everything went well. Why dwell on it? When the session was unprofitable, the emotional discomfort of revisiting it makes avoidance psychologically appealing. In both cases, good and bad, the emotional response to the outcome creates resistance to structured reflection. The second source is the absence of a clear review structure. Most traders know, in a vague way, that reviewing trades is important, but without a specific set of questions to answer and a specific format to answer them in, the review becomes effortful in a way that makes it easy to deprioritize. A clear, concise structure removes that effort barrier and makes the review something that can be completed in 10 minutes, even on days when the emotional pull toward avoidance is strong. There is also something called the experience learning gap. Experience and learning are not the same thing. Experience is simply the accumulation of events. Learning is the deliberate extraction of patterns and principles from those events. Without structured reflection, experience does not automatically convert to learning. Marcus had 3 years of experience. He had much less than 3 years of actual learning. The review process is the bridge between the two. The exact fix. The 10-minute end-of-day review. 5 specific questions. Every session. Written in your journal. Question 1. How many trades did I take today, and how many of them met all of my entry criteria? This tells you your daily execution rate. Over time, tracking this number shows you whether your criteria compliance is improving, declining, or staying flat, which is a more meaningful performance metric than daily P&L. Question 2. On any trade where I deviated from my plan, what was the specific thought or feeling that preceded the deviation? Not what happened in the market. What happened in your mind? Was it boredom, recovery urgency, overconfidence after a win? Identifying the specific internal trigger allows you to build targeted interventions for that trigger in future sessions. Question 3. What was my emotional state at the moment I entered each trade? Rate it simply: calm, slightly anxious, or reactive. Over weeks, this builds a clear picture of the relationship between your emotional state and your trade quality. Most traders discover that their best trades come from calm states and their worst from reactive ones, but they never see this clearly until they track it explicitly. Question 4. Was there a moment today where I considered taking a trade that did not meet my criteria and chose not to? If yes, write it down and acknowledge it. This is as important as flagging the trades you took outside criteria. The discipline to not act is a skill that deserves recognition and reinforcement. Question 5. What is one specific thing I will do differently in tomorrow's session based on today's review? Not 5 things. 1. Specific, actionable. Something concrete enough that tomorrow morning, when you read it during your plan review component of the morning protocol, you know exactly what it means and what you will do. Marcus built this review process and ran it for 60 consecutive trading days. After 60 days, he had a documented record of his patterns that was more accurate and more useful than anything he had accumulated in the previous 3 years of unstructured experience. He could see that his worst trades clustered in the final 30 minutes of his sessions, indicating cognitive fatigue as a specific vulnerability. He could see that his entry rate outside criteria spiked on Mondays, suggesting that weekend emotional reset was incomplete and he needed to extend his morning protocol on Monday mornings. He could see that sessions following days where he had completed a full review were measurably better than sessions following days where he had skipped it. His plateau ended, not dramatically, gradually, consistently, session by session, because he had finally converted his experience into learning, and learning, compounded daily, produced growth that 3 years of experience alone never had. Run the 10-minute end-of-day review after every session without exception. 5 questions: execution rate, deviation triggers, emotional states, discipline wins, 1 improvement for tomorrow. Experience without structured reflection is just repetition. The review converts experience into learning, and learning compounds into genuine development, three parts of a daily routine, each one ignored by most traders, each one producing measurable results for the traders who commit to them. Part 1. The Morning Preparation Protocol. 15 minutes before every session. No market noise for the first 30 minutes after waking. Physical activation, clean slate statement, plan review, session commitment. The mental environment you bring to the platform determines the quality of the decisions you make on it. Chris's consistency transformed when he stopped flooding his morning with noise and started arriving at the charts with a prepared, focused mental state. Part 2. The in-session reset structure. A 2-minute intertrade reset after every closed trade. Stand up, walk away, name your emotional state, evaluate the market fresh. Extended to 10 minutes after 2 consecutive losses. This prevents session drift, the progressive deterioration of decision quality that costs most traders a significant portion of their monthly results. Sophia closed a 25-point execution quality gap between her early and late session trades. The reset was the only thing that changed. Part 3. The 10-minute end-of-day review. 5 questions. Every session. Written in your journal. Execution rate, deviation triggers, emotional states during entries, discipline wins. One specific improvement for tomorrow. Experience without structured reflection is just repetition. The review is what converts daily experience into compounding development. Marcus broke a year-long performance plateau simply by building the habit of turning each session into a deliberate learning event. These 3 routines do not require more screen time. They do not require a new strategy. They require 25 minutes per trading day, 15 before the session and 10 after it, of deliberate, structured preparation and reflection. That 25 minutes is the highest leverage investment available to any trader at any level. It is what separates the traders who are still at the same place in 2 years from the ones who look back and cannot believe how far they have come. If this video gave you something real and immediately applicable, subscribe right now and hit the bell. Every week I post content at exactly this depth. No shortcuts, no hype, no recycled beginner advice. Just the honest behavioral and psychological work that builds traders who actually get better over time. And in the next video, I am going to show you exactly how to build your first complete trading plan from scratch. Every section, every question you need to answer. The exact framework that takes you from trading reactively to trading with a system you genuinely trust. That video is the foundation everything else is built on. Subscribe. Do not miss it. See you there.